Most people think banks love savers, that banks want you to keep money in your account, that the more cash you save, the happier the bank becomes. But what if I told you that once you start building real savings, especially when you cross a number like $20,000, the relationship between you and the financial system quietly changes, not publicly, not dramatically, but psychologically, strategically, and financially, because the moment you stop needing debt, you become harder to control, and banks know this better than anyone. Now, before we continue, I want you to pay close attention to this video because this is not one of those emotional banks are evil conversations. This is about understanding how the system actually works, how money flows, how debt creates dependence, and why financially stable people operate differently from everyone else. And if at any point during this video you realize your mindset is starting to shift, subscribe, because most people spend years working for money without ever learning how money truly behaves. Now let's begin with something simple. A person with zero savings behaves very differently from a person with $20,000 saved. The person with no savings is fragile. One emergency destroys them. One missed paycheck creates panic. One medical bill, one car problem, one job loss. And suddenly, they're borrowing money. And that borrowing is where banks make their real money. See, banks do not become massively profitable because people save. They become profitable because people owe. Credit cards, car loans, mortgages, personal loans, overdraft fees, interest payments. Debt is the engine, and the less desperate you are financially, the less valuable you become to that engine. Think about it. If you have $20,000 saved, something changes mentally. You stop making panic decisions. You stop accepting terrible situations out of fear. You don't immediately reach for a credit card during emergencies. You can walk away from toxic jobs. You can survive periods without income. You can negotiate better. You can wait. And financially speaking, the ability to wait is power. That's one of the biggest secrets wealthy people understand. Poor people are forced to rush. Rich people can afford patience. Now, obviously, $20,000 is not rich in today's world, but it represents something far more important: breathing room. And the financial system becomes nervous the moment people gain breathing room, because financially calm people are difficult customers. They ask questions. They compare options. They avoid unnecessary interest. They don't panic buy things. They don't constantly refinance debt. And they don't stay trapped as easily. This is why modern banking quietly encourages spending far more than saving. Look around. Everywhere you turn, you're encouraged to consume. Buy now. Pay later. Upgrade today. Finance this. Split payments into 4 easy installments. The entire culture rewards immediate gratification because a disciplined saver disrupts the cycle. And here's where things get even more interesting. The moment you save a serious amount of money, people start expecting you to use it. Banks want it invested. Companies want it spent. Friends want you more generous. Family may suddenly view you differently, but truly, financially intelligent people understand something critical. Money sitting untouched creates options. And options threaten systems built on dependency. Now let's clarify something important before people misunderstand this video. Banks are not literally sitting in meetings panicking because you personally saved $20,000. That's not the point. The point is that widespread financial independence changes economic behavior. If millions of people suddenly had strong savings habits, credit card profits would fall. Impulse spending would slow. Predatory lending would weaken. People would tolerate less nonsense at work. Consumers would become harder to manipulate emotionally. And entire industries depend on emotional spending. That's why financial literacy is strangely absent from most people's education. Most people can graduate school without understanding taxes, debt, investing, interest rates, inflation, or budgeting, but they can identify luxury brands. Interesting, isn't it? Because the system functions best when people earn money emotionally and spend money emotionally. A calm saver interrupts that cycle. Now here's another thing nobody talks about. Once you have $20,000 saved, you start seeing the world differently. You begin noticing how many people are trapped. You realize how many workers cannot afford to quit jobs they hate. How many people stay in relationships because they can't survive financially alone. How many people appear successful while secretly drowning in payments. And you also notice something uncomfortable. A shocking amount of society runs on appearances. Cars people can't afford, designer items bought on credit, luxury lifestyles financed by stress. But savers understand delayed gratification. And delayed gratification is one of the rarest financial superpowers left in modern society, because the average person has been trained to chase dopamine instead of stability. Every notification, every sale, every trend, every upgrade, the system constantly whispers, "Spend now, reward yourself, you deserve it." But disciplined saving requires the opposite mindset. It requires saying, "I value future freedom more than temporary validation." That mindset alone separates people financially. Now here's where things become even deeper. The real reason savings matter isn't just emergencies, it's leverage. The person with savings negotiates differently. Imagine two employees. One has $200 left before payday. The other has $20,000 saved. Who do you think feels more pressure during salary negotiations? Who can walk away easier? Who can resist manipulation better? Who sleeps better at night? Exactly. Savings creates psychological strength. And that psychological strength changes your entire relationship with the world. This is why financially independent people often appear calmer. It's not because they never experience problems. It's because fewer situations feel life-threatening. Now let me tell you something most people discover too late. The first $10,000 you save changes your habits. The next $10,000 changes your identity. Because at some point, you stop seeing yourself as someone barely surviving and start seeing yourself as someone capable of building real security. That mental shift is enormous. And once it happens, it becomes very difficult for society to pull you back into reckless financial behavior. You stop trying to impress people. You stop chasing every trend. You stop confusing luxury with success. You begin prioritizing peace. And peace is incredibly profitable, not just financially, mentally. Now here's a retention question for you. Have you ever noticed how financially desperate people are often sold the most expensive solutions? High-interest loans, rent-to-own furniture, payday advances, predatory financing. Because desperation removes bargaining power. That's why emergency savings are more than money. They're protection from exploitation. And the system quietly prefers consumers without protection. Because fear sells. Fear sells insurance. Fear sells loans. Fear sells urgency. But savings reduce fear. That's why financially secure people move differently. Now here's something fascinating. Once someone reaches meaningful savings, banks often start treating them differently too. Suddenly you receive premium offers, higher tier accounts, investment invitations, wealth management calls, because now you're no longer just a borrower, you're capital. Your money becomes useful to the system in a different way. And ironically, the more money you have, the more financial opportunities become available to you. Lower interest rates, better credit terms, exclusive investments, which reveals another uncomfortable truth about money. The system often rewards people who already have it. That's why building initial savings is so difficult. but so important, because the first layer of financial stability changes everything afterward. And here's the part nobody wants to admit. Most people never reach serious savings because modern life constantly drains them before they can. Inflation rises, housing rises, food rises, entertainment expands endlessly, and social media creates non-stop comparison. People feel pressured to look rich before becoming financially stable. That's a dangerous trap. Real wealth is often quiet. Real financial power is invisible. The person with the nicest looking lifestyle is not always the safest financially. Sometimes the quiet person with old clothes, low expenses, and a growing savings account is the strongest person in the room, because freedom matters more than appearances. Now, if you're listening to this and you currently have little or no savings, don't get discouraged. This video is not about making you feel behind. It's about helping you understand the game differently. Financial stability doesn't appear overnight. It starts with small habits repeated consistently, spending less than you earn, avoiding unnecessary debt, learning patience, building gradually, protecting your peace, and most importantly, learning to stop performing wealth and start building it. Because the truth is, $20,000 is not magical. What's magical is the mindset required to reach it. Discipline, consistency, restraint, long-term thinking. Those traits alone already place someone ahead of the majority financially. And once you develop those traits, your future changes, not instantly, but permanently. So, the next time someone laughs at your budgeting, questions why you're not upgrading everything, or thinks your financial discipline is boring, remember this. Most people are trapped trying to look financially successful. Very few are quietly becoming financially free. And the difference between those two paths becomes enormous over time. If you made it this far, comment, "Freedom over appearances," because that one sentence might be the biggest financial lesson on this channel. And subscribe if you want more videos that expose the psychology of money, wealth, and financial independence in a way most people never hear, because once you understand the system, you stop being controlled by it.